Hello guys. In the last class, I talked about horizontal support and resistance, right? That is support and resistance like this, where we are considering movement of price in a horizontal support and resistance. And I said that in this class, I'm going to be talking about trend lines. That is markets that are either going up like this, right, or are trending down, coming down like this. But before that, I want to show us something. If you notice, I have been doing all the analysis and the drawing of support and resistance on 1 hour time frame. I taught us about time frame analysis. I said that once you click your on your screen, you see different time frames, and I've explained all these things and what they mean, all these time frames and what they mean. Now, whenever I want to draw support and resistance, it's always advisable that you draw it on bigger time frames, like daily time frame and 4 hours time frame. Daily time frame, right? And 4 hours time frame. Any of them. Because when you draw it on daily time frame, it tells you the long-term movements of the price. Now, when you draw on daily time frame or 4 hours time frame, then you come back to 1 hour time frame and look for entries, either 1 hour time frame or 30 minutes time frame, to look for entries. Like I told you before, there are different kinds of traders, so it depends on the type of trader you are. If you're the kind of trader that enters trades that last for hours or at most a day, then you're this kind of trader that will do analysis on 4 hours time frame and make your entry on 1 hour. Understand? So that is just the thing about support and resistance. You draw it on bigger time frames and look for lower time frames to enter. But if you're a long-term trader, someone that trades for a long period of time, you might need to um, make your analysis on a weekly time frame. It's loading. This is the weekly time frame, right? So if you are a long-term trader, you need to make your analysis on the weekly time frame. Now, every candle that forms on this weekly time frame forms every single candle here represents 1 week. So people that usually trade weekly are banks, hedge funds, investment banks, or people or investors, people that trade long term. You understand? Some of them might enter the market, let's say around this point, right, and hold it for months, for some months till it gets to this point. And the advantage of weekly trading is that they make more profits because they hold it for a longer time. And another thing is that they are not really moved by emotions because they just have a particular time. They make analysis, they enter, and they wait for a specific date before they check the results. You understand? Unlike scalpers or people that check the trade every single period of time to know what's going on. But for someone that is starting learning, it's always advisable to do analysis on 4 hours time frame or daily time frame and make your entries on 1 hour time frame. You understand? So that's just it for that aspect. Then I also wanted to explain something. If you notice on your chart, you will notice some dotted lines, right? Now these dotted lines here represents um, like a separation of session. Now from this dotted line to this dotted line, it represents, since I'm on 1 hour time frame, it represents the amount of all the candles that form from this point to this point are 24. Since this is a 1 hour time frame, if you count the candles that formed in this, or let's go back to this one here, from here to here is 24. If you switch from 1 hour to 4 hours time frame, this is now it takes, if you count number of candles that form in this 4 hours time frame, I think it should represent candles that form here in a week. If you switch to daily time frame, it should be candles that form in a month. So all these things, this thing that looks like grid, you are seeing here, grid like this, is just telling you the amount of the different sessions. So on this particular session, right, from here to here, or from here to here, from here to here, yeah. So all the candles that we form for a day, we only form from this point to this point. Now, if you go down, you will see different dates here. This is 8th May. This is 18th May. Sorry. If you check the dates here, you will notice that each of the dates is corresponding to a particular day, from this day to this day, from this day to this day, right? If you now switch it to 4 hours time frame, now you will notice that if you want, you can count the candles that formed from the 5th of May to 11th of May, right? 5th of May to 11th of May. That is, I think, 6-day interval. You can, if you count from here to here, from 29th of May to 5th of May, from 25th of May, just like that, just like that. So these are dates, and these are the different candles that forms in these sessions. If you check D1 daily time frame, you check the daily time frame, right? You will see the dates, 19th, and if you use this crosshair cursor, crosshair cursor here, if you click on it now and click and touch any candle, it will show you the dates the candle formed, right? You can see it, the dates the candle formed. It keeps showing. So all these are also basic information I just wanted to show you guys to help you understand the charts better, so you know exactly what you're doing. So let's switch back to where we stopped in the previous class, when I said I'll talk about horizontal um, support and resistance, right? So now let's switch our charts. But before that, sorry, in the previous class I said that you need to switch to line charts for you to be able to draw the support and resistance without these wicks, right? Now, but the thing is, there are some people that prefer uh, drawing the support and resistance with the wicks attached. That's, say, let's say this is a case of a candle like this. They draw the candle, they draw the support and resistance with the wicks. You understand? So there are, some people don't, some people do. So just in case you notice those wicks, it's, you understand why. You understand? The thing is, when you draw with those wicks, you are able to catch um, um, the market at exact points, and you will not be caught by what we call fake outs, fake outs, because there are some times that you will see it will look like, let's say this is a market, right? The market is going up, going up. It will look like it wants to break out. It looks like it wants to break out. All of a sudden, it will form a long wick. Then it will now close inside. Um, let's say shooting star. Yeah, shooting star. It forms a shooting star at the resistance. Now there's a long wick outside here. You understand? Then it goes back down. So the thing is, there are some people that prefer drawing the support at the resistance at this point rather than at this body. You understand? So that just in case price comes back here, because there are sometimes that price will come back past the body and go and touch the exact point that the wick touched last before it goes down. So let's switch our chart to um, um, from portrait mode to, let's switch it off, switch it like this, so that we can have a better view. Then see if we can draw our trend line. Okay, so if you want to draw the trend line, you just touch your screen, you go here. Remember, this one is for drawing horizontal support and resistance. Now to draw trend line, we are going to need this one, right? This diagonal one. So now when you have it, you touch the screen, then you begin to check for points where it's touched. Where, remember, we are more interested in what price did in the last period, right? So let's see if you can join this, right? You can join these points. Once we can join the last two previous points, we are good to go. Right? Okay. I've drawn this. You can also do this. Let's try and do something else. It touched this point. We are considering movement of price. You can also do this and see if it touches another point. If it doesn't, then we can ignore this one. Okay, we can consider these two, right? So now we have drawn this. Let's try and draw for support. Okay, let's try and draw for support this side, and this one is perfect. The support is perfect. Why did I say so? Come on, let me zoom in. Okay. Okay, this is why I said this particular one is perfect. If you notice, you will notice that it touched it 3 times. It touched it here, 1, touched it here, 2, then it touched it the 3rd time here. You see the advantage of using those wicks. You understand? So if previously, before the market reached this point here, I have drawn this support and this support, you notice that immediately it came and touched the support here, it shot up, price went up immediately, right? So now let's consider this. The market is in a downtrend and it is going from up to down to up to down to up to down. So this is a support and resistance for a downtrend like this. Market is trending downwards, right? You can see the market is trending downwards. You understand? So just see how price just keeps moving in between this our down trend line, and the good thing is that you can combine both horizontal support and resistance and trend line, so that you can be monitoring every movement of price, every single movement of price. You can be monitoring it. You understand? So from doing this now, once you have combined all the analytical tools, it makes your whole analysis easier. Now if you check all the points that price touched this support, right, at this point you notice that it formed what? A doji candlestick, right? Remember I said that we need to combine different candlestick patterns to help give us better entries. But there are times when some single candles can act as reversal patterns or reversal signals. Like in this case now, there was no let's say bullish or bearish engulfing. There was no morning star or evening star. It was just this doji that touched it. Then all of a sudden the price went up. So when we are considering that single candles can act as reversal signals, it is in cases like this when you sight them at significant points of price, like in this case here, where you started this doji on the support, it can stand, it can hold. If you now go back, if you scroll again and check again, if you check again here at this point, what formed here was tweezer bottom or inside bar pattern. So you notice that after this it touched the support, it ranged for some time, but it still later went up. You understand? It still later went up. Then look at this inside bar pattern. See the pattern that formed here, inside bar pattern. So just like that, there's no rocket science about the whole thing. Rocket science about the whole thing. The thing is just easy. Then if you check this point here, what formed here at this resistance is a bearish engulfing. Then price went down. Just like that. If you check the what formed at this point here, we have inverted hammer. I think inverted hammer formed at this point, at this resistance, and price went down. So just like that, there's no big deal about the whole thing. The thing is just easy, right? So let's zoom in and check if we can see another point where we can draw our let's say trend line for a market that is buying up. Okay, that's buying up. Let's see if you can draw anyone. Like I said before, don't force it. If you don't see, leave it like that. If you can't find anyone where you can draw it, leave it like that. Let's check. We should be able to draw one here or not. Let's try for this point and see. Let's try for this point and see. From this low, from this low, right? From this low to this point. Let's see if it doesn't work, we leave it and look for another one. If it doesn't work, we don't, remember, we'll not force it. If it doesn't work, we don't force it. Okay, let's zoom in and see what we have. Okay, let's see how many points it touched. Here it touched once, here it touched twice, it touched here, went down, touched here again, still went. It was kind of ranging on the resistance, then it went down here and went back up. We won't consider this. Let's find another one. Let's look for another one if we will find. Okay, let's try this out and see. Let's try this out. I'm looking for a point that touched 3 times. A point that touched 3 times. 3 times. Okay. 3 times. Um, let's draw the down as for the support. Let's draw for the support. If it doesn't touch, we'll not force it. It means it's not valid. Okay, I think we can make use of this. We can make use of this one. Reason being, it touched at this point one, it touched at this point two, touched at this point three, touched at this point four. While for here, it touched here one, touched here two, and at this point three. Now, if you notice in this case now, price, it sold here, it went up, touched our resistance, it went down, it didn't go back down immediately, it went back up here, then it later came down, touched here, went up, touched here again, went up again, touched. You understand? So we can say that this one is a valid uptrend. Now let's check the kind of candles that formed at those points, points there. This one here, clearly, this is, let's come in. At this point here is bearish engulfing, here is tweezer top or inside buy pattern, here is evening star pattern, right? Evening star pattern, although this one it kind of broke out, this is what we call a fake out, a fake out. It did like it has broken the trend line and went down again. So it did like it has broken the trend line and went down again. Fake outs. Sometimes this kind of patterns will make people believe that the market will continue buying up, but it just goes down. You understand? So fake outs. So now let's check the candles that formed on this downtrend. Here is a bullish engulfing, right? Bullish engulfing. Here is an inside bar pattern, right? Here is a bullish engulfing, right? Now, notice that immediately it came down, came back here again. It broke down and kept on going down. So we can see that this was the end of this particular uptrend. Then see this case here. If you have once you have noticed this pattern now, let's say it broke out, went down, came to form this what we call higher high, right? Then it went down again and still touch that same point again. You mark that point as a point of your resistance. Then if you are looking for opportunity again to sell, you take note of this particular number, this 126420, because price will definitely come back here and to react in a certain way, which it did. It came back and when it came back to this point, it sold again. So let's look for another example of uptrend and see if we can get something valid from it. Okay, let's try and draw one here. Let's use our week. Yeah, or uptrend. If it doesn't fit, don't force it, just let it be. If it doesn't fit, you leave it. If it doesn't fit, don't force it. Okay, we can say that this serves as an uptrend. Reason being, reason being, it touched at this point. Why? One, it touched at this point. It touched at this point. Touched at this point, meaning we have now been able to get two valid points we can draw. Use to draw our support and resistance. So we draw here. We draw here. Now we have gotten two confirmed points we can use to draw the horizontal support and resistance. Remember, when we have a support and resistance, we are highly interested in price coming back to react at those points to help give us better entries. You understand? So now that it has touched these 2 points, right? Notice that when it came back, see this resistance. When it reached this particular point, price reacted in a particular way. It went down, then it broke out from this, broke out from the uptrend here. It broke out. Let's look for another example where we can have up to three, um, let's say three points where price touched 3 points, so that we can easily draw. Let's check if we will find. The market is currently, if you check here, you will see closed. Market is usually closed on Friday, on weekends, so there's no active market for me to um, draw the horizontal support and resistance because the market is already moving. It's already closed. If the day I'm doing this video is on Saturday, so if it was on a day or a trading day, it would have been easier. But let's make do of what we have, sha. Okay. Um, this particular pair USD card, there are not much trending markets. Let me switch to another pair and see if I can get a trending market. Okay. This is GBP JPY, and I've been able to see a perfect place where I can draw trend line, trend line for an uptrend. If you check this particular market, let's bring in our tool. Now let's try and draw for the from these weeks. Now if you notice here, this point touches, right? This point touches here, this point touches. Now if you notice in this particular market, you will see that 4 points have already touched. This point 1, this point 2. Coming. You notice that it touched this point, right? Touched this point, touched at this point, touched at this point. So this is a very, very good example. 4 solid points I touched. Let's draw for the resistance. Let's bring in our tool, right? Let's bring in this. Yes. While in this case it touched here, and touched at this point. So this is a perfect example of a trend line, of an uptrend trend line. Price came down from here. It came down, touched this point, went up again, touched this point, went up again, just like that, as easy as that. So if this is an active market and you have been able to mark out your trend line at this point, these 4 points, right? So now, as you have been able to draw the trend line, you are waiting for price to come back to those previous points and touch them, and then you check the kind of pattern that forms on that trend line, either the support or the resistance, to help tell you the kind of the next thing to do, whether you have to buy or you have to sell. Remember, if you check all the patterns forming on the trend line, here is inside bar pattern or tweezer top, here is a doji candle rejection, right? Here is an inside bar or tweezer top, here is an inside bar or rejection. We call these rejection candles. Any candle you see with long wicks like this on support or resistance, I said I would talk about rejection candles, but I said I have to teach support and resistance first, to make the explanation easier. Now this is all these candles you are seeing with long wicks forming on the support or resistance are what we call rejection candles. Rejection candles. Now see the pattern that forms here. This one is spinning top, right? So once you notice this kind of pattern on the support or resistance, you make your entries. See the pattern that forms here, inside bar pattern, just like that. You make your entry. It still came back and touched it again and formed bullish engulfing, just like that. So the whole thing is just easy. You just need to understand before it finally broke out here, then came back to touch that line again and go up. Remember I talked about um, when you break the trend line or break the support or resistance, then anytime it comes back to touch that same point and go back, we call it retest. We call it retest. You see price went to retest that same point again. So it went to retest that point, right? Then it went up. Then see again, it still came back and touch. It broke the resistance, or let's say it broke in this case support, and immediately it reached that particular point of price, it still went back up. You understand? So price is very sensitive to history. What had happened before in price? What had happened before in price? Let's say this is the past in price. Eh? It will happen again in the future. Price is very repetitive. Price is very what? Repetitive. Repetitive. So also you need to keep taking note of previous points or previous areas where price did certain things, because if it did a particular thing at that point, it will come back and do the same thing again. So I think I've explained um, horizontal support and resistance for uptrend and for downtrend with good examples. With good examples. It's a good example. I've explained retests. I've explained rejection candles. Remember, I said rejection candles are anytime you notice a long wick, a candle with long wick, either an inverted hammer or a hammer or a hanging man or a doji, just anything that form. Anytime you notice a pattern form with long wick on the support and resistance, we call them rejection. It means that price reached that particular point, right? Price reached particular point and got rejected and went back. So that's why we call them rejection candles. Like now, let me in this case now, the bears, that's sellers, were selling. Then immediately the sellers reached this support. Price got rejected. That's why the candle formed back up, and the buyers took control. The buyers did not allow the sellers to break this point and continue going down. So the buyers took control of the market by this rejection here. This candle here represents rejection, and price sold. Just like that. There's no big deal about it. See this one. This candle here. This is hanging man. See the long wick, rejection candle, rejection. See this one too, shooting star. See the long rejection. Price just came, touched this point and went up. You understand? Rejection candles. See this rejection, this spinning top here. It's a rejection candle, right? Rejection candle, just like that. See this one. um See this one here, rejection candle on the supports. Remember, if it breaks the resistance and touches that same point, it becomes support now. So just like that. Then see this side, it just came here, touched that same point, right, and went up. Rejection candle. So there's no big deal about the whole thing. It's just one simple stuff. And once you understand, the whole thing is easy for you. So You just need to understand all these patterns and take note of the places that they form. That's just it. No rocket science or any big deal in them. So let's go back to the um, the note. Let's see the things I've not covered. So see the example I used in this note here. It's almost just the same thing. Same thing. So I think I talked about breakouts here, right? These breakouts, when price goes like this, then all of a sudden the breakout breaks out. Remember I said that before you enter the breakout, wait for the pattern, wait for it to either come back and retest. Retest means if you come back and touch that same point again, to either convert the support to resistance or resistance to support, then check the candlestick pattern that forms there, then you enter. So just like that, there's no um, big deal there. Or if you don't see, like in a case where you notice a breakout, when the market goes like this and it breaks out and it doesn't form any particular, it didn't come back to the test, and you didn't see any significant candlestick pattern below it, what you do is you wait for the next two candles that forms after the breakout, then you enter the market just like that. So there's no big deal about support. There's no big deal about resistance, right? Yeah, and that thing I didn't talk about is I think I talked about it a little bit. Swing high, swing low, swing high, swing low. Just when you see the market moving like this in an uptrend, when it goes like this, like this, like this, like this, see what we call them. We call these ones swing high. We call this swing low, swing high, swing low, just like that. In a market that is trending up, when it goes up first, it forms, you mark that point, it goes, and when it forms something like this, swing high, and it goes down, swing low. Remember, swing high in a market that is buying or a market that is trending up is always higher than the swing low. Then in the market that is trending downwards, we have like this, like this, like this, like that, just like that. Like in this example here, swing low, swing high, swing low, swing high. Now, this swing low and swing high are the points you use to draw your support and resistance, like I said before. So all these things are just easy, right? They're just easy things to take note of. Swing low, swing high. If you are watching videos of some people that teach how to trade forex or that trade, they talk about all these things, all these swing low, swing high. These are just some terminologies that are used in trading, right? Another thing I forgot to talk about was let me switch back to this. Another thing I forgot to talk about was this pending orders, setting pending orders. One thing is to draw the trend line, and that thing is for you to be there when price will actually touch those particular areas or touch those particular points. Let's say now you looked at your chart and you are somewhere, the chart was somewhere around this point, and you are not around, and the thing is you cannot be looking at your chart every single minute or time of the day. What we do to be able to take advantage of this point so that we don't miss it, because the moment price has missed those particular points, you have missed out. So what we do is to set pending orders. Remember, I talked about pending orders before. I talked about buy stop, buy stop. I talked about sell stop. I talked about sell stop. I talked about limit orders. Um, limit orders. I talked about buy stop limit or buy limit. I talked about buy limit. Talked about buy limit. I talked about sell limit. Like that, sell limit. So what you just do is, if you have been able to draw your support, right, and your resistance point, mark that 4 points. What you just do is you set your pending order, right? What you just do is you just carry your what do you call it, crosshair cursor, right? Crosshair cursor. Then once you are marked at this point, then you set your pending order around this particular point, right? So that just in case price comes down to that particular point again, you will make your money. Just see, look at in this case, right? See something at this point here, this particular point here, right? If you move your crosshair cursor to that point, if you notice, the next point that price came to buy was around the region of this point. You understand? It's like a straight line. So what you just do in this kind of case, carry your cursor, then mark out this number 163.803, then set your buy stop. So once price touches that point, it buys up, right? So now let's check again. Let's check for this part. We have considered this point, and we saw that it worked exactly. You come and consider this point, you saw that immediately he reached this particular point, he bought exactly. So just like that, there's no big deal in the whole thing. Just set your pending order, your pending order like that until the whole thing is easy for you. The whole thing is easy. The whole thing is just made easy for you. The buy stop. Buy stop. Okay. Then look at this point where it touched this particular area. This rejection formed. In this side, you just mark it out, right? Because price will come down to that area, and look at it. It came back exactly for this buy stop. So like I told you before, price is just repetitive. It's always going to repeat itself. So you just need to take advantage of those points and mark them out. So when price comes back to those areas, the whole thing is easy for you, just like that. Or if you have the time to be on your chart, and once you notice it's getting close, let's say in this case the market has been buying and it's getting close to this resistance, you just mark the region around the trend line, then use it and pick the number and set your pending order, just like that. Let's go back to our book. Then if you check this, the same thing I just said, see limit order, see your entry, right? See the same thing I talked about. No big deal about the whole thing. The thing is just simple. Just a simple stuff. So I think from the things I've taught in support and resistance, you should be very good in using support and resistance now, both for horizontal support and resistance, for trend lines, both for trending market up and trending market down. So I think this is where we're going to stop for support and resistance. In the next class, I'm going to talk about how to trade news on Forex Factory and some other sites. Then the next thing after that, we'll talk about pivot points, like that. So I think this is where we're going to stop. Thank you for your time.